All right, let's talk about Urban Outfitters because their last earnings call was a real head-scratcher. The company just put up an absolutely spectacular, record-breaking quarter. So, why did the stock immediately start to tumble? We're going to dig into the numbers, unpack the story, and figure out what's really going on.
And here it is, the central paradox. On one hand, you have everything you could possibly want. Record sales, a big earnings beat, and every single brand firing on all cylinders. But then you look at the market's reaction, and the stock gets hammered, dropping 5% in after-hours trading. So what did investors see that completely overshadowed all that good news?
Okay, here's how we're going to break it all down. First, we'll look at just how stellar this record quarter really was. Then, we'll get to the heart of the problem, this tariff overhang that totally spooked the market. We'll check out management's game plan to deal with it, and then we'll give you our verdict for the next call. And of course, we'll wrap up with the usual disclaimer.
So first things first, let's talk about the results. And honestly, it's hard to overstate this. The operational performance in Q2 was just fantastic across the board.
The top-line growth was absolutely outstanding. Revenue hit a record $1.5 billion. That's up more than 11% from last year. This is exactly the kind of strong performance that gets the bulls really excited.
And you know what? The bottom line was just as impressive. GAAP earnings per share landed at $1.58. But that number all by itself doesn't even tell the whole story. To really get why this was such a big deal, you got to see it next to what Wall Street thought was going to happen.
And here you go. I mean, they didn't just beat expectations, they blew right past them. Revenue came in about $30 million ahead of schedule, and that $1.58 in earnings, it absolutely crushed the consensus by at least 10 cents. This wasn't just a little beat, folks. This was a loud and clear, decisive win.
So, you might be wondering, where did all this strength come from? Well, the short answer is everywhere. Every single brand posted positive comps. Free People was on a tear, and Anthropologie kept up its fantastic momentum. But you know, the real story here, the one people were watching, is that 4.2% growth at the main Urban Outfitters brand. That's 2 positive quarters in a row, which tells you this turnaround is for real.
Oh, and then there's Nuuly, the company's clothing rental service. Look, it's not just growing anymore. This thing is exploding. Revenue shot up over 53%, and it just had its most profitable quarter ever. You gotta understand, this isn't just some little side project. Nuuly is quickly becoming a serious, high-margin growth engine for the whole business. So, with all of this amazing news, record sales, brands on fire, a hot new business, we're back to the big question. Why the sell-off? Well, it's because Wall Street isn't just looking in the rearview mirror. It's always looking ahead, and it saw one big, ugly storm cloud on the horizon.
And that storm cloud has a name: tariffs. This one word, this single headwind, completely took over the conversation on the earnings call and became the #1 focus for every analyst and investor listening in.
And this is the number that sent a chill down the market's spine. Management guided that new tariffs are going to smack gross margins by 75 basis points in the second half of the year. Now, that might not sound like a huge number, but trust me, in the razor-thin world of retail, that is a massive headwind. It just injected a huge dose of uncertainty into the entire outlook.
But you have to give management credit here. They didn't just drop this bombshell and walk away. Nope, they came to the call prepared with a very clear strategy to fight back against this pressure on their margins.
So they laid out this 4-part playbook. First, they're going back to their vendors to negotiate better deals. At the same time, they're moving production to different countries to get around the tariffs. Next up, they're looking at logistics, shifting from pricey air freight to cheaper ocean shipping. But notice what's dead last on that list: raising prices. That's their absolute last resort because they want to protect their customers.
So when you look at the Q3 guidance, you can see this whole story play out. The sales outlook still looks great. High single-digit growth, solid comps across the board, and Nuuly is still rocketing ahead. But then you get to the punchline: gross margin. Expected to be flat. All the awesome work they did to improve profitability is basically going to get wiped out by these tariffs.
All right, so let's bring it all home. What's our verdict for the next call? This is a classic Wall Street showdown. You've got flawless execution on one side and a scary macro risk on the other.
I mean, the bull case is just so easy to make. The company is performing at a record level, every brand is clicking, the big UO turnaround is legit, and Nuuly is a beast. But then the bear case is just as strong. That 75 basis point hit to margins is no joke, and it's coming soon. And let's not forget the biggest point.
The stock had already run up 110% in the last year. A lot of the good news was already baked into the price.
So, after weighing that incredible execution against this very real risk, we're initiating our coverage with a market perform rating.
Here's our thinking. The company's execution has been nearly perfect, but that's now pretty much canceled out by this big external tariff risk. After that massive rally, the bar was just set incredibly high. We think the stock is probably going to trade sideways for a while as the market adopts a wait-and-see approach on these margins. The long-term story with Newly is still fantastic, for sure, but in the short term, this uncertainty is going to put a cap on the stock's potential.
All right, and as we wrap up, just one last thing, the mandatory disclaimer.
This is not financial advice. Look, Urban Outfitters has proven it can execute at the highest level, but the next couple of quarters are going to be the real test. The question for investors has shifted. It's no longer just, can they grow? Now it's, can they protect their profits in a really tricky environment? Thanks for tuning in.